Thank you for joining us. Don't go anywhere. This is Wealth in the Winner's Circle with Harley Shanklin, financial advisor, and we are here from the team of the RDW Financial Group. How are you doing this week? It's good to see you. Dave is out on assignment. What's on your mind this week?
Well, you know, Spike, it's good to see you as well. Always,
thank you.
Of course, helps kind of calm me down a little bit, because what's on my mind is market volatility. It's been a big one. It's been a big one. That's really been weighing on my mind, our clients' minds, as well as many of you out there watching today.
Yeah, up and down, and depending on when our program airs right now, we could be in one of the up cycles where we continue to bash through the upper barriers, where some of our markets hitting their all-time highs. And then there's some other kind of announcement, and then the market reacts. And the market is being us. It's us as human beings who are reacting. Should we buy? Should we sell? Should we freak out? Should we go to cash? Should we buy gold? It's just, Harley, so there's so much confusion out there.
It really is.
How do you protect yourself? So let's talk a little bit about RDW. Are we trying to capture all of these gains of the markets right now? Or maybe you can explain how you're preparing a little bit more your kinds of clients for retirement.
So, and that's exactly it right there, Spike, because we're not trying to capture everything out there, because if we were, we'd be trying to capture the downside as well. And that's the risk that we take going into retirement if we are just depending completely and wholly on the stock market to create those returns. And unfortunately, those returns aren't always positive. And so what we specialize at RDW Financial Group is bringing in the entire picture, right? When it comes to retirement, not just the investment piece of it, but the taxes, the insurance, the estate planning, all of those things to make sure that you out there in the audience today are on the right track, right? When to take Social Security, how to take that pension, and how do you maybe need to restructure your investments as you approach retirement to make sure that it's successful.
So I want to be clear, because as a financial group, as a wealth manager, the portfolio management, that is a very important part of what you do. Maybe we might even say the word primary part of what you do. But there are other tools that you use to help people create income. And for some folks out there, they sometimes think this is a bad word.
I know which word you're going to say.
All right,
too,
what
Spike.
is it? What is it?
Annuity, the A word.
Yes. How does RDW feel about annuities as part of an income plan?
So us at our firm, whether it's myself, Dave, Jeremy, any of the other advisors that work in our office, we really take a kind of agnostic view with everything when it comes to investments. I will often tell our clients and those who choose to sit down and meet with us that there is no such thing as a bad investment. There's just bad placement, because every investment serves somebody's purpose. And what we always want to do for our clients out there that sit down with us is determine what is your purpose and how can we structure a plan and the right investments to serve that purpose. And annuities can play a part in that, Spike.
All right, but not in their totality. I think something we've had in a conversation before is say, the problem with certain kinds of annuities is that an individual, a client, a person, a family will walk into somebody's office, and the only tool, every tool that they offer as what is the solution to the problem is an annuity. The difference is that's not what RDW is about.
No, it's not. And it's one of those unfortunate things that when we hear the word annuity, it's just kind of this catch-all term that we don't completely understand. We just hear from various pundits or other quote-unquote experts out there that annuities are bad. And that's all they really say about it. They don't talk about the intricacies and details of it. It's just like kind of the old joke that all lawyers are bad. Well, there's a lot of lawyers out there that do a lot of great things. Not everyone is an ambulance chaser. No offense out there to the lawyers out there, but it's the same thing when it comes to annuities. There are many different types, and that's why it's so important to engage in an actual planning process to make sure that, one, you understand what may fit best into your plan, and work with an advisor who understands the total landscape of it and can help you fit and structure the right annuities, if it's even right for you out there.
Harley, that's such a great point, especially with your name, because I was going to say, it's like saying you once got in a car accident. That means all vehicles are bad. Now, where I didn't want to totally make the connection is because it could also be like saying, Harley, Motorcycles are dangerous. Motorcycles are dangerous for everyone. Now, I don't want to talk to the motorcycle rider. So we're going to offend lawyers and motorcycle riders right off the top of the bat here. But I mean, motorcycles can be very dangerous. And I'm not equating annuities to motorcycles, but a motorcycle, a very specific tool. How about that there are annuities that have very specific functions, more so thinking like vehicles? Are all annuities the same?
Absolutely not. They're, as I said before, annuity is just kind of a catch-all term that encompasses a whole number and diversity of various products out there. You have ones out there that are meant solely for income. You have ones out there that are meant for growth, and you have combinations of the two. Some that are purely insurance-based, some that have a more market-based and investment approach to them. They all are structured differently, have different fees and pros and cons associated with all of them. And that's why, once again, it's that planning process that we take everyone through, that retirement start planning process, to make sure that we are finding the right solutions.
So on today's program, something we wanted to start doing is becoming a little bit more active in the program. We have a quiz for you to take at home right now. It's fun, it's fast, and it's free. Go to the rdwretirementquiz.com, rdwretirementquiz.com. You can type that into your browser. You can open up your phone, because I know you're sitting there scrolling with it as you're watching TV. Open it up to the camera function and point it at this QR code. Click on it, and you can go into the quiz right now. How prepared for you are you at your retirement right now? All kinds of different questions, but not too hard. Not too many different things, but all of the different kinds of elements that you guys actually talk about, not just at RDW, but here at Wealth in the Winner's Circle.
Yep.
When somebody comes in and they have a former annuity, when we come back, I want to ask you about different types, kind of go through a little bit of your own quiz if you know all the different stylings. But are you able to review somebody's annuity if they already have one? I just wanted to know about that, because there might be folks out there who have one and thinking, well, how do I know if this one's good for me or not?
Oh, absolutely. It's one of the most common things that folks come in to our office, is to have a review, second opinion out there. If you have worked with an advisor, have put a retirement plan together, and annuities were a part of that, right? We want to make sure that we take time to understand it from our side, as well as to make sure that you understand exactly how it works, and to make sure that it's still working for you and that you completely understand it, and gives us the opportunity, and you the opportunity, to potentially enhance it, make it better, because that is a possibility in today's market right now, Spike.
We're going to continue to talk about how do you create income in retirement, especially with today's volatility, and annuity could be one of the tools that could work for you, but it shouldn't be the only answer and solution to your retirement questions. Call the phone number at the bottom of the screen so you can get started on your own RDW financial plan for retirement. It's no cost to you. There's no obligation. There are folks standing by right now. They'll schedule time for you to sit down with the team here of the RDW Financial Group. More with Harley Shanklin, your financial advisor, when we get back right after this.
As a kid, I wanted nothing more than to be a hero. But little did I know I would actually get that opportunity, and it really started for me. The catalyst was 9/11. And as the war on terror continued to unfold, I put my money where my mouth was. And I ended up landing with the 101st Airborne Division and became a light infantry medic with them, and I spent a total of 28 months deployed overseas. I had the opportunity to serve with some of the greatest men and women that this country has to offer. And I had the blessing and honor to meet my wife through that journey. And after 10 years of serving in active duty, we started to build a family. Our son Leo was born. And I quickly realized that it wasn't the environment that I wanted to raise a family in. It meant moving around, and it meant risking my life in ways that may put me in a position that I may not be there to play catch with my son, right? To walk my daughter down the aisle eventually. And so I started looking for other opportunities, and that was when my father-in-law came to me, and he ran a financial planning and wealth management firm in Indianapolis. The relationships that he was able to build with his clients, it really resonated with me, because I felt that same care with those men that I took care of overseas. And so I made the leap, became a financial advisor, and I like to think that I've continued that mission. Rather than their medical hero, I'm their financial hero.
Welcome back to Wealth in the Winner's Circle with financial advisor Harley Shanklin. I am Spike Spangle. Today, bit of our market volatility. And I've got to say, as of this airing right now, our markets, again, continuing to hit through all-time highs. But we can just go back a few weeks ago. Tariff talk, tax talk, a lot of concern, not just here in the United States, but around the country. So really compressed our markets. Harley, for somebody who wants to retire this year or maybe next year, they want to start protecting themselves from that kind of market volatility. Or do you think we're done with this year's market volatility?
Absolutely not, Spike. The market volatility is not going anywhere because kind of the good and the bad of more and more of us participating within the market. It's so much easier today than it was 10, 20, especially 30, 40 years ago for the regular average day Joe to participate in the market. We have apps that do it now. And because of that, the market has become much more emotional. Right? Anytime someone says it, whether it's a political figure or somebody, even just a stock market pundit says something, and that can move the market.
Mm-hmm. Yes.
And we're always told we want to separate our emotions from our money. Well, it's kind of hard to do that when the entire country's emotions are moving the market. And so, yeah, as we approach retirement, we want to try and take as much of that movement out as we can, whether it's our own emotions or the emotion of the market.
So if we're kind of gearing towards that last year or two, preparing ourselves, we're getting towards retirement, I really don't think your 401k provider is reaching out to you and saying, hey, Bob, hey, Susan, you're 64 or 65. Do we want to take some risk off? What do you start to do to prepare yourself? Let's start with the 401ks. Is there anything you can do when you're over that retirement age at that 64, 65 that you can do with those accounts? Or do you have to just continue to let it ride?
Absolutely not. And when you mention a year or two out from retirement, it actually for us starts much earlier than that. We like to get started on that process about 3 to 5 years from retirement before you enter what we call the retirement red zone, where it's at that point out there where you out there watching today cannot afford to take a 20, 30, 40% loss within that time frame because there's just not enough time to make it up. For those of us who lived through the financial crisis, remember very well what our 401k accounts look like. And I would challenge anyone out there that's watching today to ask yourself, when was the last time your 401k provider came to you and wanted to sit down and talk about how your investments are structured within that plan? It doesn't happen.
Yeah.
More times than not, you can't even name the person's who is in charge of your plan and supposed to be helping you with those investments and how to build the right plan.
And it's not... Oh boy, you open up a big can of worms there. Your 401k provider or whatever, your TSP, 457, 403B, it's that they're not really there to give you investment advice. They can help you make sure you know what your password is or how to get in and out of your account, or sometimes they'll have little dials on there to show you percentages of what you can be in, but you're exposed to the markets and you're the one having to make the selections.
Well, and the other part of it, Spike, is that 401k provider is not going to come to you and say, hey, you know what? You've reached this magical age of 59 and a half where you can now begin selecting investments outside of our plan. They're not going to come to, they want you to leave, they want you to leave your money within that 401k plan. And I'm not saying that you should roll all of it out, right? But that becomes your first opportunity to begin looking at the whole world of investments, working with a professional like all of us at RDW Financial Group, who this is what we specialize in. When we are starting to approach that retirement red zone, helping to build the right plan for you that has the right investments that are going to carry you through that finish line. We always talk about racing in here, Spike, and that's really what it's all about, is how do we successfully get through those final laps of our working life and get into retirement?
I honestly, so the white flag normally, and around the rest of the world, usually means surrender. But the white flag in racing means it's that last lap. It's that last lap, and you don't want to be taking too much risk in that last lap. So if we're working, we're 64, we're 65, can we start to look at a tool like an annuity? I mean, how do we do that? Well, if our biggest chunk of savings is in those retirement accounts, I understand that there's legislation a couple of years ago that allows supposedly annuities to be offered in 401k plans, but I don't know that we've seen a lot yet. What do you do if you're in that last lap? You're that year or two away. Can you start to look at things like annuities? How would you use one?
Sure. Well, as I mentioned, that magical age of 59 and a half, that's when you're eligible to do an in-service rollover, where you can roll those funds over into a traditional IRA or Roth IRA, depending on how your 401k is set up. And it's at that point then we can look to products like annuities to help solve some of these issues of growth with safety, as well as income involved in there. And that goes back once again, these 401k plans don't want to push those types of products or solutions because it takes money out of their pocket. At the end of the day, that's what it all comes down to, and what we want to do is make sure that we're structuring a plan that is going to enhance, right? Not take away, but enhance and build more confidence and structure into it. I have a great client story. I always think about these clients.
Please.
Tim and Beth, they came to us a number of years ago, and just like many of you out there watching today, came in with a lot of trepidation and kind of misunderstanding of how annuities work. And they came in and said, Harley, we absolutely do not want any annuities a part of our plan, anything. I know that's a common thing that we often hear. And I said, okay, Tim, Beth, I completely understand, but let's just take a little bit of time to talk about it. And I was able to show them how we were able to enhance their retirement to where they were going to be able to spend more in retirement. It was going to grow over time and take less stress and pressure, pay less fees on the rest of their investments. A year later, when we sat down to review everything that we've been doing, they said, Harley, the thing that we are most happy about is the annuity that you convinced us was going to enhance everything. And here's why. This is the word they used: peace of mind. Peace of mind is what it provided to them because it enhanced their income. So they didn't have to worry about where the money was going to come from to pay their bills or their lights. They didn't have to worry about what was happening in the market, which has been extremely important in recent times here, where so many of you out there may be losing sleep at night when you know that the market is going down. And what is that doing to your retirement? Well, Tim and Beth, we were able to help take that fear away and give them the confidence to not have to worry about it.
And Harley, I would imagine this is not the first time you've heard that in my office. We don't want anything to do with annuities. We want to see your income plan. We want to see what your S.T.A.R.T program is all about, but just as long as it doesn't have an annuity. Do you think we need to rename these things? Because if you were able to say, how about this? We've got a program. We take a portion of your life savings, maybe a quarter of it, maybe a third. We might even put it in a couple of different tools, and we're going to create a pension-like plan for you. It's going to be investable money. You'll be able to have some access to it, but it's kind of signed up in a contract. But when you turn on the income, no matter how long you live, it'll pay you income for the rest of your life. If you pitched it something like that, you'd have a line around the block. Say, sure, yeah, what's this pension-like income? But then when you say annuity, it's like you lose half the audience right away.
Well, and it's funny you mentioned the line around the block. Now, we don't have a line around the block waiting to meet with us, but Tim and Beth, since that, have referred a number of their amazing friends and family to us that are now working with us and enjoying the same benefits. And it's not that everyone needs an annuity. In fact, one of the referrals that they provided to us, there wasn't a need for one. They really did not need an annuity as part of their plan, but we were able to still help go through systematically through our retirement START process, looking at their secure income, their tax efficiency, advanced planning, risk management, and tailored investments to make sure that they had the right plan put together for them.
Thank you very much. Folks, you can get started on your own written financial plan, your complete process right now. Call the phone number on the bottom of the screen. We have folks that are standing by. They'll schedule an appointment so you can sit down with the RDW Financial Group at your convenience, and most importantly, at no cost to you. See which tools you do and do not need for your retirement. Then you get to make the decision on how the team could implement it for you. Call that phone number right now. More with Harley Shanklin, your financial advisor, right after this.
every Friday we have our team training. The calendar's clear. We put the phones on the answering machine with a nice greeting, and we teach each other about our various roles and responsibilities within the office. So as an advisor, I might spend an hour talking about a specific aspect of retirement planning, not because the other team members directly deal in it, but it helps them if clients call in with questions, anything like that they at least have an understanding of it. And then I take that same opportunity from our team members. When it comes to our servicing department, I'm terrible at paperwork. I want them to tell me about how it's processed, how to do it. So when I'm sitting in front of a client talking about a new account that we may be opening, that I have a better understanding of how that process works. So the client can be clearly informed and know the expectations going forward for it. Imagine not having to face your retirement with the same old corporate solutions as everyone else. In these economic times, you deserve a fresh perspective that includes a personalized income plan and tax map from an independent fiduciary advisor whose focus is on you. Call the number you see here to schedule your complimentary review.
Welcome back to Wealth in the Winner's Circle with financial advisor Harley Shanklin. I'm Spike Spangle. Today we're talking about that there is a lot of market volatility, but how do we protect our portfolio as we go into our retirement years, even when we're waving that white flag, meaning the last lap, that last year or two right before retirement. We want to make sure we start to protect things. But as we've been saying, this word annuity, there's often an emotional reaction to it. I love the fact that you used the word agnostic, because I didn't want to say that we're atheists about annuities, because that would mean that we don't believe in them. Agnostic means that we reserve any kind of our own personal feeling. It's a tool, and you don't have a feeling about a tool in your garage. I either need a saw, or you need a broom, or you need the leaf blower. There's different tools, and different tools accomplish different things, and what we don't want to do is have feelings about them, correct?
Correct.
Well, the American public seems to have had feelings about this tool because billions and billions of dollars have flowed into annuity tools over the last 2 years alone. 300, 400 billion for 2023, 2024. This year, the numbers are still out, but it still seems to be a popular avenue. What's going on? Why do you think?
Well, because people are afraid of the volatility. They want some safety, some stability. They want some sort of pension-like investment that they can rely on throughout their retirement, no matter what may come along. And there's a whole smattering of different types of annuities out there. I mean, I sent you a list of them.
You did. I was afraid you were going to test me on them. So here we go. We start with, and this is where I think the public also either gets confused or overwhelmed.
Yep.
So thank you for sending. Variable annuity. Okay, obviously it sounds like it changes, but what does variable annuity mean to you?
So a variable annuity, Spike, is an annuity product. It's an insurance product that's wrapped around mutual funds. Mutual funds that are traded out there on the stock market that do go up and down. That's that variable aspect to it. Then the insurance comes along and builds kind of a product around it with some guarantees, typically some sort of income guarantees, or a somewhat of a ceiling, like you can lose up to this much before you're going to realize it. So maybe the market could go down 10% before you begin realizing that loss. That's kind of how a variable annuity can work to an extent. What we typically see with those is really high fees. Spike.
I was going to say, because you
really
started with mutual funds, and when you say the word mutual funds, for my background in trade, I already think, well, aren't there exchange-traded funds that do things a little bit less expensively? And then you said there's more wrapped around it. I'm going to throw a curveball at you. Sounds like one of my favorite terrible snacks. It's called a Scottish egg. And a Scottish egg is a hard-boiled egg, and it's wrapped around a fried meatball.
Yep.
So you're like, wait a second, none of that's way too much unhealthy right there. So the variable annuity, who would want to use something like that? Somebody who's saying, I want to have exposure to the stock market, yet still not have to be in control of my investments? I'm not sure where's the placement of it.
Well, that's the thing, Spike, is almost nobody out there says, I want a variable annuity, or even I want an annuity in general, right? It more comes down to they're looking for a solution, they meet with a professional, and this is the solution that they present. And unfortunately, many times it can be inefficient just from what I mentioned as far as the fee structure within annuities, because the majority of the fees that are charged within them, you out there, you will never actually see those fees. You're not seeing that on the statement. It's behind the scenes inside the mutual funds themselves or the insurance company.
Okay, what about then, so does the fixed annuity, is a fixed annuity something that just gives me a fixed set of return, or is it a fixed set of investment option? What's the fixed part?
I'll make it real easy. A fixed annuity is the same basic thing as a CD. So a bank issues out that CD, certificate of deposit, with a guaranteed interest rate. A fixed annuity does the same thing. It will offer you a fixed interest rate, right? Rate of return over a fixed period of time, be it 1 year, 2 years, 3 years, 5, all the way up to 10 years, usually is what you can find it to. And that rate won't change.
Okay. Then, and then what about, I'd say, the indexed annuity? Is the indexed annuity very similar then to the variable annuity because it's based on indexes?
It's similar in that it participates within the market, but the great thing is it only participates to the upside spike. It doesn't participate to the downside. And you may say, well, Harley, that sounds too good to be true. And many of you out there may be thinking that. Well, here's the thing. Nothing is for free out there. The insurance companies have to make money as well. And that's why they set a cap or a ceiling to say this is how much you can make. So if they say you can earn up to 10%, if the market goes up 10%, you get 10%. If it goes down 10%, you don't get anything, but you don't lose anything. That's kind of the beauty of the fixed indexed annuity.
At RDW, do you have a preference, or do you not use any of these? What kind of annuity tool do you prefer to use, and for what reasons?
So we will typically use the fixed index annuities is by far our most popular use of annuities in general within a plan, because it offers us that growth opportunity with the downside protection, as well as some fixed rate annuities in there. Because right now, with interest rates so high, they're giving us really good rates over short periods of time, over that 3 to 5 year period, where we can lock in 5% or more over that time period right now. The fixed index annuities, once again, because interest rates are high, are offering us good fixed rates as well as good market participation. That offers just a vast majority of opportunity out there.
And Harley, I want to be clear from you as well, and for all of the viewers out there, using an annuity tool with the RDW Financial Group could just be one of the tools that we use in your complete portfolio review. Why don't you call the phone number right now down on the bottom of the screen and see what the entire S.T.A.R.T program is about. It's your complete written financial plan for retirement, which includes investments in your portfolio, your risk, your tax distributions, your estate planning, healthcare, Social Security selections, all that and more. It gets started right now with a phone call from you. Call that phone number. We'll be back again next week.